Welcome. It's Chili Davis. I'm here to do a video today on business credit. And I want to welcome back all my subscribers and welcome my new viewers. So today I'm just going to discuss business lines of credit and different sources you can get them from. And I'm on squareup.com for the infamous Square company. And it says, what is a business line of credit? And in my business, I've been using Square for the last 4 or 5 years. So I'm familiar with some of Square's products and services. Goes on to say, starting and growing business requires working capitals, and there's many ways that you can invest your business. You can take a look at one of them, a business line of credit. So the business line of credit is a revolving, flexible capital that gives you access to cash that works, that a bank or online lender may approve established business for a certain dollar amount. And then when you withdraw, you subtract that number from the total credit limit to determine your remaining available credit. And once you withdraw the funds, interest starts to occur. For example, if you have $10,000 in credit and you spend $2,000, you have $8,000 available in credit. A business line of credit is revolving credit. So when you pay back to $2,000, once again, you have $10,000. And what types of business line of credit are there? If you're looking in the business line of credit, be aware there's secure and unsecured lines of credit. How to get a business line of credit, the process to obtain a secure line of credit may take longer than a process for unsecured because your assets may need to be verified and appraised at source of repayment. Whether or not your line of credit is secured or unsecured, it may affect the amount that you may be able to access and interest rates that are charged. So yeah, this is squareup.com. I'm going to put the link below. And this is Square's version of a line of credit. And be aware, it's a lot of these lines of credit I really like with the new FinTech is based on how much revenue you're doing. So if you're doing 5,000, they may give you a loan for 2,500. If you're doing revenue of $10,000 a month, they'll give you a loan of $5,000 a month. But you have to be consistent. So that's the key. PayPal working capital. Why choose PayPal working capital? It says flexible payments, one affordable fixed fee, no credit check, funding in minutes. And that's true. Believe it or not, you can have an established business and you take your business down to your local bank or credit union and they will deny you. Sometimes they'll say, well, you know, how long you been in business? Maybe you've been in business for 5 years. The bank and the credit unions, they have so much red tape and paperwork you have to fill. They have to appraise assets. They have to do so much background check. They have to check your personal credit. So with the new FinTechs, they let you know, hey, funding's available in minutes, no credit check. The loan is primarily based on your PayPal account history. So there it is, your PayPal account history. So again, this is similar to Square, where if you're bringing consistently, you know, $5,000, $10,000 a month, based off of that information that they get from your merchant account, they're able to secure your loan in minutes or a line of credit. I knew a young lady, she was doing a lot of hair and weaves, and that's a hot business. And so she was buying all her hair and with cash and stuff like that, but she's signed up for PayPal, and she was able to, after she started having her customers use credit cards, one of the payment options, she was able to go and get a loan from them. So it's just intelligent to start using the FinTechs rather than your local bank or credit union, because the FinTech can approve you instantly. Now, with any line of credit, there is some risk. So you always want to look at the interest rate and the terms of the loan, how quickly you have to pay it back. And then goes on to say, how much can I receive? PayPal working capital is based off your PayPal sales. So you receive an amount that fits your business. There's no credit check when you apply, so there's no effect on your credit score. And that's all we want. And then they have the chart differences, the PayPal difference. PayPal account makes it easier for your business to get funding. And oftentimes when you're running a business, you might need $10,000 at a time to go do whatever. So PayPal makes that easy. If you're in business and you have, displayed good revenue the last 3 or 4 months, more than likely PayPal will give you a loan. So this is documentation, none. Credit card, none. And this is basically versus traditional base. Extensive documentation typically required, including financial statements for the last 2 to 3 years and business legal documents. And I've seen this. I've been in business since 2014, and I used to fill out all these applications thinking that, I was going to get the 100,000, and my business was doing 100,000. But basically at that time, they wanted history for 4 years, and I didn't have it. I had history for 2 years. So needless to say, I didn't get the loan. Application and funding time takes 5 minutes, 20 minutes to apply, 1 week to receive a card versus days to weeks, the month sometimes. Credit check, no. Credit card, yes. Collateral, no. Credit card, no. So repayments, a percentage of each sale, monthly payments, monthly fixed payments. So yeah, I agree. Now I haven't, of recent years, I've been in business out for over 7 years. I have gone to a credit union. I've got it done. I think I went through SoFi and another local credit union, but basically, in the beginning, when you're starting your business, most banks will not give you a loan because if you don't have a track record, they're not going to give you a. But since I've been in business now for 7 years, I can do either or. But when I was starting my business, this would have been the easier route, something like PayPal or Square. How the cost of the loan is billed, one fixed fee. Periodic interest, both have a periodic interest and both has a one fixed fee. Additional fees, none. Annual late fees and application annual early repayment late fees. So they do have an annual fee and late fee, whereas the traditional bank, they have an application fee, annual fee, an early repayment fee, and late fees. So, but actually the loan I got, I don't have an early repayment through the credit union bank. Goes on to say personal guarantee, with PayPal, no, credit card, yes. And yes, with the bank, if you're getting a major line of credit or loan, yes, you're gonna have to personal guarantee that loan. Okay, so the next company I want to cover here is BlueVine. Says, what do you need to get started? Again, what we just talked about, you need good personal credit. And when they say 600 plus FICO, they actually mean more than that. That's just barely scratching the surface. They prefer you to have like a 700 because the rate is what I would be suspect on. Basic details about your business, 6 months in business. So when they say 6 months in business, they mean 6 months of bank statements, business bank statements of cash flow and revenue. And then you need a minimum of 10,000 in monthly revenue. So I basically covered all that. bank connections year to year, bank statement. I covered all that, but it's just because I'm real experienced in this space. But BlueVine is an option. Some people have gotten it. I mean, it just depends how big your business is. If your business is doing $500,000 a year, BlueVine may be an option. You know, they do up to $250,000. So, you know, you figure sometimes what it is with business credit is that each bank or financial institution has different standards. But the new FinTech seem to have the least, not necessarily standards, but they have the least criteria. It's just like, basically show us the money, show us your revenue, and then we can make a deal to figure out how much interest rate we're going to charge you, and it's done. Well, because banks are backed by the government, FDIC insured, and as well as credit unions, they have all this paperwork they have to fill out. So that's the advantage. That the fintechs, they don't have to show all this documentation and paperwork for each loan they give. All they have to do is show that, hey, this business needed a loan, they have revenue, and this is why we gave them the loan. Well, with banks, because they get some of their funding from the government and they're under FDIC insured, that means if something happens to the account, it's insured by the government. They have all these regulations, and so they're just not willing to, you know, take that risk. So anyway, this was just a quick video on business credit. I did have two other ones I was going to share. Divi, get Divi, the credit and software your business needs to thrive. And one thing I like about Divi is that they do have like a budget software for your business, and basically allows you to kind of divvy up your accounts. And it says here, manage invoices and accounts payable. And so like if you have 3 employees, you can give each employee a different business credit card in their name. And it's just basically a line of credit that you have with Divi. It could be 10,000, and you could divvy it up with 3 employees. And then you can manage their expenses. So if you want to give, you know, employee A, you know, 6,000 line of credit, when you give employee B 3,000, and you give employee C 1,000 line of credit, you can do that with Divi. Because if you have let's say, for example, a team of salesmen, and one of them is your, you know, your expert salesman, you want to give that person a line of credit to go out and, you know, market your product or service as they will. Divi is a line of credit. I get promotional material from them all the time. And like I said, they have software to help manage your budget of your business and give you a snapshot of everything. It says, say goodbye to expenses report. Business purchases happen on Divi and stay categorized with a few steps. And say goodbye to out-of-the-pocket reimbursements and manual expense reports. Now, as a software engineer, I wrote those before. I wrote expense reports and the colorful charts and the colorful spreadsheets and stuff like that. So I know exactly what they're talking about. You want to make everything easy for your employees. You want to make it all automated if possible. And Divi does that. Because that was one of the big things that we always had to deal with when people went out on a trip for the company. When they came back in, they wrote all their stuff in an email or they fill out the form, but then there wasn't something that it didn't quite fit into the regular parameters of what was considered an expense or whether it's going to reimburse it. That way, once they swipe that card with the Divi software, it's all tracked and it's automatically kind of, you know, dispersed out into the spreadsheet automatically. So that's Divi. Says take control of your budgets, build a business with admins and users, and divvy out funds and watch your spend coming exactly on target with real-time tracking and controls. You never need to go over budget again. And if many of you work for, companies, that's the big thing. Don't go over budget, don't go over budget. And then what happens? You go over budget and you have to do an override. You have to talk to this, the controller, you have to talk to the finance person in the office. It's just a mess. So that's why I recommend Divi. It says manage invoices and accounts payables with ease. So again, it says start spending with Divi for free. That's right, Divi's world-class spend software is for free, no hidden fees or contracts, as many physical and virtual cards as you need, and add on for a fraction of price of the competitors. So this is the CFO of Health Solutions. Divi makes it easy, super easy to manage physical and virtual cards for over 70 card holders. No big month and end reconciliation process. Everything is tracked in one place in one account for free. And that's the CFO, Paige Oldland, at Health Solutions. And the last business line of credit that I wanted to talk about was Credit Strong. This is a bank out of Austin. Basically, they let you open a savings account in your business name only. And it says build business credit for your company without using your personal credit, apply in just minutes, make small monthly loan payments and build up to 120 months of payment history, track your progress, cancel or pay off your business builder loan anytime for free. And it says apply with EIN, add owners, start building business credit, track your progress. And again, this is a simple line of credit. If you're a brand new business, you always want to be saving money. And with this line of credit, you're putting away anywhere from $115 a month to $200. And over time, each one of those payments are tracked. So, you get that information reported on your business credit report. And that will make you more lendable in the future. The longer you have the account, the more lendable you will be for your business. So again, I want to thank you for watching. Thank you for listening. And please like, share, and comment below.